Welcome to part 2 of our point and figure workshop. We are among the few people that have an interest in point and figure. It's arcane, it's cranky, it's old, it's difficult to do, and therefore most people just avoid it. But I have great appreciation and respect for you because you are here, you're determined to learn it. Let's do it. It's a phenomenal technique. I know many people from my past who have used point and figure exclusively in their trading. They don't use any other chart type. They do their own point and figure charts by hand. And from those charts, they do all their trading and use no other charts. And it's a very powerful method. Now, I'm not recommending this, but I just want to give you an idea just how useful this subject is. Okay, so we're going to start with current market comments just very quickly because there's some interesting things going on in the market right now, and we should just be aware of them. And then you had great questions. I want to answer your questions because this is what I love so much about the classroom is the feedback. In the classroom, it would be instantaneous. We could, I could look at students' faces and I could tell whether I was explaining things very well. And so that's not the case here. I wish we were together in the classroom, but so be it. Anyway, your questions answered and you have some good ones, and then we're going to do some case studies, continue on. Part of the answer to your questions are also going to be great case studies. All right, so let's pause for a second. I want to go to some other charts. Hold on. Here is a 4-hour chart of the NASDAQ Composite going back to September. And below it is the NASDAQ advanced decline line, but what it is it's an oscillator, 5 periods. So this is 4-hour chart, 5 period smoothing of this data. And what we really are interested in is divergent characteristics at the top. So here is a top right here, and you can see that this is already turned down. So there's early warning taking place here. And then here is a high level thrust, which in and of itself is bullish. It says that prices will continue to go higher. Watch for divergence. So divergence comes in, and divergence here, we can see that there's a high made at this point, and this data falls off dramatically and is back down to around the 0 line, and that is an important divergence. So often divergences will occur and they won't go into such a deep level, but when they do, we would expect weakness to continue for some period of time. I don't expect that this necessarily has to be large amounts of weakness, but it could go down to the bottom of the channel. Let's talk about the channel for a second. So drawn off of this low and this low with a parallel overbought line up here, you can see overbought at this level, corrects down to the bottom of the channel and slightly goes through it. That is a form of weakness. So it tends to get outside of the range of the bounds of the channel, goes back to the top, tests it twice. Now it's pulling back again. This time we have a lot of weakness in the advanced decline data. So I would expect a return to the bottom of the channel and possibly to this support area right here. And keep in mind this 13,000 area, this could be a much larger distribution structure. We will know later on as we see how well the AD line, the AD oscillator rallies here. If it just has a very poor rally as it did over here, right there, then we would be expecting some additional weakness. But this could be the beginning of a reaccumulation structure. This is what we had in September. This was all reaccumulation here. We could see this again. Okay, this is the bullish percent of the S&P 500. Bullish percent is a form of breadth as the advanced decline is also, you can see back at the beginning of 2020, there was a divergence that occurred from the January to the February peak. We've talked about that at the time and here. And you can see also this deterioration right here as the market was pushing up the S&P into a high, and that produced a correction of sorts and a range-bound condition for a number of months. Here we can see something similar going on at this time. This data is at a lower level than it was in January, February of 2020, and you can see here on this break and rally up to the level that it recently attained, that this is divergence. And this divergence is a series of lower highs against higher highs in the index. We'll watch that closely. And then here is the S&P 2-hour chart. Trend channel as we just drew in the NASDAQ 100. And here we see that there's an attempt to come out of the channel. Here that is an early sign of weakness or trouble. And then there is a rally attempt in February that takes us up to this level, and then divergences start to come in as we go through this period and now this period. Look at the breakdown of the AD line as it goes below zero. AD oscillator, just to be clear. And so this weakness is much greater than the weakness we saw before on the way up. And so we'll watch for a rally, and if the rally is of poor quality in price and on the AD oscillator, then we will keep an eye on that, and we will watch to see how well this trades as it comes down to the channel. And then also we have support somewhere in this area right here. And again, this is just on a 2-hour basis, so it's not a huge structure. It's just interesting intraday information. Great question from Red Oak Trader on Twitter, where he asks, why only use daily instead of weekly or even monthly for long-term counting? So I take this, the idea of this to be that as we look at this chart, we're doing 3-box reversal method here, daily data, and we're doing, here you can see daily data, 3-box method, traditional scaling. And this looks as though in lows that we have a reaccumulation type structure. It's rallying up to the resistance area at 178. Looks like it wants to get out of this area. This is 15 columns across. Now, when you're doing a 3-box method, every time you change columns, you have to have a 3-box reversal to move over to the right to another column based on the scaling. So here we're looking at 2-point scaling. So that's 3 boxes times 2, or 6 points of reversal that has to take place to get to a new column. If we go to weekly data, we're not going to see all the volatility that occurred in there in that structure. 3-box in and of itself is a smoothing technique that reduces the number of columns that we're counting because of the 3 boxes or 6 points of reversal that we need to go to the next column. And so to go to weekly data, we're going to reduce the amount of data that we're seeing, because it's possible that every day of the week in a certain week, we could have 3-point reversal moves or 3-box reversal moves each and every day, which all would produce count. So what happens if we go here from weekly or daily to weekly data? And let's see what happens. And this is just a very small area that we're counting. Well, this now count goes from 15 columns across. It goes 2, 4, 6, 8, 10, 12, 13. We've lost 2 columns of count. So instead of getting 90 points, 15 times 3 times 2, instead of getting 90 points of count generation, we're only getting 78. And that very well could be an underestimate of the potential count in that reaccumulation area. So we want to use our reversal method to determine the amount of data that we're seeing. So I like to say one box reversal is swing trading in akin to a daily vertical bar chart. 3 box reversal is akin to weekly charting and is akin to a weekly vertical chart. And then 5 box reversal method is for very large counts. And so it is akin to a monthly chart. I'm going to show you examples of this as we go forward if we have time. We may have to actually have part 3 on our point and figure workshop here. So I hope that helps to describe why we use daily data all the time, because we want to get all the swings intraday in the day, because it's a high-low method we're using. And we also want to get all the swings through the week. If we use weekly data, we're going to miss some of it. And you can imagine the bigger the base or the bigger the top that we're looking at, if we're using weekly data, we're not seeing all the volatility. Very good question, though. Thank you. Justin asks a great question. I was wondering if there was an easier way to count the boxes or if counting manually is the only way. Counting manually is tedious. Now, you use the right kind of chart paper and you draw your charts by hand, or you have symmetrical square boxes that you're using and you can print them on the computer. You can use a protractor to be able to do one box reversal. So the width should equal the height. And so that is a shortcut way if you can print off charts that have symmetrical boxes. So that's one way to do it with one box reversal. The computer systems, the counting methods, there may be some out there that I don't know about. My experience is that you have to do the counting manually. And so the 3 box method is a little easier to count because you're counting by twos. The other thing is there are certain point and figure drawing or point and figure plotting engines that have 5 box grids, so you can count by fives, 5, 10, 15, 20. And so it just depends on the charting service that you're using. I have been working on the idea of trying to have a system that will count for you. This is tricky business because of the mixed count issue. Mixed counting is when a chart runs over a scaling change. So it goes from, say, 2-point scaling to 4, 1-point scaling to 2. When that happens, you have to adjust appropriately, otherwise your counts are going to be off, and that absolutely doubles up the work. And so just telling you, if I'm thinking it's accumulation for a stock I like, and I begin building a position at phase C, is there any useful reason to try to take a count right away, meaning right at phase C? Or am I better off waiting for the sign of strength rally to create a last point of support, assuming the structure continues to develop as accumulation? Thanks again, and most definitely thumbs up. Franz, thank you so much. 3 thumbs up. Thank you. Well, Franz is in our weekly Wyckoff market discussion group, and he's does exceptional work in the markets, and I like his question a lot. So I'm putting up these schematics so that we can talk about, let's do a highlighter here. Here is the point that he's talking about on the chart. So here is phase C. This is the last area of testing before the uptrend begins. We start our buying as Wyckoffians when the uptrend starts in earnest. As soon as phase C, phase D is established and we identify it, we start to scale up our positions. That's the Wyckoff methodology. So we would buy on the test of the spring, we'd buy on this LPS. Any of the turns off of these reactions are places to initiate or add to positions. And here's the sign of strength and the backup into an LPS that Franz talked about in his question. So he's asking, okay, you start buying, let's say on the test of this spring, do you count from here over and you have, say, a count here to the secondary test and a count here to the selling climax? Do you start counting right away? And my answer is absolutely. Even though you don't know if you have a completed accumulation yet, you never really know that until you're up and out of the accumulation area. But as you can tell from the Wyckoff method, we're starting our accumulation with the composite operator. The composite operator has been operating systematically, accumulating throughout this structure. We're trying to time it so that we can get on when prices are scaling up, they're rising, they're rallying. We want to participate when the market is ready to go up. So do we take account here? Yes, 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 we take account, but we understand that it's provisional because of two reasons. One is we're not altogether sure that accumulation is complete. Some Wyckoffians don't even start buying until it's up and out of the accumulation area. That's just a preference and perfectly okay. So in the case of a purchasing inside of the accumulation in the structure, you want to have some objective way, which point and figure does for us, to tell us that there is enough potential in this structure to give us the type of account in the type of price projection that makes this potentially an attractive campaign for us. And so here's what we will do is that as time goes on, we will actually keep building our counts. So as the rally continues and goes up to the resistance area and then out, we will now take our count all the way across and have a more complete idea of the potential. Now it's possible that it may be a very long time before this accumulation is done, and it may grow much larger. It may not even be accumulation. But if we're buying down here in the lower area where Franz is pointing to, we want to have some objective way to measure the potential of this structure. Very good question. Same idea over here. This is just phase C as an LPS. It's a higher low, not a lower low, as it takes out support and then it starts to turn up into a new uptrend. Terrific question. Lena asks the question, when to use one box reversal and three box reversal when using the intraday data and ATR scaling. For the NDX NASDAQ 100 intraday swing trade example, you were using three box reversal. I would love to know how to decide which box reversal number to use on intraday. Great question, Lena. And here is an example 30-minute NDX chart. This really goes back to our discussion about the current market situation. You can see here that there's something that appears to have a very minor intraday scale distribution Recall that we had a throw over of an uptrending channel through here, and now we're turned back into the channel, and notice the market is had an upthrusting action, a decline into the channel, a rally of very poor quality, basically sideways, shows there's very little demand, very low volume, a rally that fails, and then another rally a little bit better. So down to the support area, now trying to get back up into the structure of this trading range. So if there is distribution going on here, how do we count this? My advice is always to start on intraday with a one box reversal method. Here is an example. Because you're trying to swing trade, I believe you're trying to swing trade these small movements in the market, which can be very, very profitable. Here's the upthrusting action, and then an immediate reversal back into the channel. Now this is looking an awful lot like distribution. We always use ATR scaling. My advice is to use one box reversal. Lena, you want to see all the critical points in the structure that you were just looking at on the vertical chart. So here, preliminary supply, up thrust, this might be the climax, up thrusting action, sign of weakness, failed rally, this is a last point of supply, provisionally, this is just our example. Now we count this across. So in this case, we have a count on this structure here, I think, of 15-minute, 25 across, and our box size is ATR 28.3. That gives us a potential count of 707 points. Now we know this could grow bigger, and also it could be reaccumulation, so it may just stay in this trading range for a while and start to give us a hint that it's actually turns into accumulation later on. It's still early, and we're still in the structure. Until it breaks down out of the structure, we're going to just look at everything provisionally. Same thing that we just talked about with Franz's question about accumulation and phase C, is that until we're out, we still have the potential to build more count, etc. So we have 707 points. I just took it from the high, and it takes us down to 13,159, which is right here. And so you can see that's how much potential has been generated so far. Takes us about to the bottom of that big channel we looked at a few minutes ago. But now I'd like to just have you keep in mind that here's this support area down here around 12,848 on the NASDAQ 100. If it goes down into this area and then rallies, this whole business could start to look like distribution on a larger scale. Now, Lena, we would want to consider going to 3-box method, because we're looking at much bigger data set, much bigger structure. So we're going to go probably to a 30-minute chart or a 60-minute chart on the vertical, and we're going to want to look at 3-box data, because we can see more of the data for counting purposes by doing that, and then still using ATR scaling. I can tell here that we're just going to be lucky to get through these questions, and so we're going to do part 3 to the Point Figure Workshop. So stay with me on this. We'll just keep going because I have so much good stuff for you. All right, so here's a question. Could you do a point and figure for Bitcoin looking at the recent accumulation structure in January to February 2021, when price ranged from 29,000 to 42,000? Well, let's just do that. Hang on just a sec. Now, how did we construct this chart? This is a 3-box method. It's daily data. How do we encompass or get all of the data in here that we want to be able to evaluate? Well, we do 3-box method, but we adjust the scaling. This was in the old days referred to as modified. So we've, instead of using the system scaling, we've created our own 500-point scaling. And we are, again, going back to Lena's question. Here, though, we're looking at much larger amounts of data. So even though this is 3-box, it's like weekly, but we're seeing all of the volatility daily in the data set. The yellow line across here is the accumulation area. Now, why did I pick this low here, which is 31 columns across? Because this low, which has a climactic quality to it, then rallies sharply, showing good demand and sets a range. So this low sets the support area, this resistance sets up the resistance area where supply comes in. Notice how every time it gets above the resistance area, it falls back in. This is the reason that I've chosen those points to take my count. This is the last pullback, last point of support before the rally takes us up and out of the accumulation area. So we have 31 columns times 3 times our scaling of 500 points, 46,500 points are generated here. Well, let's blow this up, and you can see that our count line is at 10,000. Our low is at 3,500, I believe, or 4,000. And so our objective range is going to be 50,500. It could be 50,000 because I think I may have picked the wrong low, but I'm not sure. 50,500 to 56,500 is going to be our objective range. So here's the 50,500, and then 56 is just above the top. Look where we are. We've just touched 52,500. Now, the question was about this area here, which is a reaccumulation structure that has occurred in 2021 right along here. Oops. And so let's go out. And so this area has 17 columns of count. Now, notice how I took this. We had a big climactic surge and a huge decline here. This sets support, this sets resistance. So now everything is contained within that structure. Last point of support pulls back one time in the structure before it rallies up and out. 17 columns of count times 3 times 500 is 25,500 points of potential added to the low. Takes us to 54,500, slightly above the top of the chart. And then from the last point of support, or I think maybe I took the midpoint, the halfway point, it takes us to 60,750. And so you can see here that this is the potential range, and it's slightly above the top of this area right here. And we would draw a line up and we would flag that, and that gives us our objective. Okay, so this is all we had time for today, but you know what? We're going to do it again next week because I've got some more cool stuff for you. I want to show you some twists and turns and features that are maybe a little obscure, and let's just continue to become really good at doing point and figure horizontal count objectives. See you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.